What's going on, everyone? Sean Dinner here from the Peterson Real Estate team at Keller Williams here in Port Credit, Mississauga. We're going to dive right into the stats. This is updated as of the end of February. We're still in March at the timing of this video, so those stats will be released next month. So let's go ahead and dive in. What we're looking at here is the average home sale price in Mississauga. So here we are. You can see a huge jump in detached homes. They remain, and I'm sure will always remain, the most desirable property type. So what we're experiencing right now is many buyers wanting that bigger property, whether it's for the backyard or simply more rooms. They've got, there's families virtually learning from home, everyone working from home. So everyone needs way more space than obviously you could get in something like an apartment or a condo townhouse. Not only that, people are just naturally upgrading to detached homes. So a lot of competition out there, and those that have detached homes already, unless they need to sell, they're holding on to them, right? So that's what we are experiencing, and I don't think this will last too much longer because, number one, buyers are going to get fed up. They're going to start looking elsewhere, start moving out of the city even if they have that option, or they'll simply start looking at maybe some smaller properties. Time will tell. So let's take a look at semi-detached homes. Again, another big jump. We hit over $1 million for a semi-detached on average in Mississauga. Condo townhomes, again, great growth over the last few months. So if you're looking at selling, whether you want to move up or you cash in, retire, pull that equity out, get some investment properties, pretty much all of these property types can allow you to do that due to the growth that we're seeing. Condo apartments, a little more volatile, especially due to COVID. Some properties weren't allowing showings. Obviously, that would affect the amount of buyers interested in a property. Many people getting out of the condo, moving either out of the city, or, like I mentioned, going into a condo town semi or a detached where they don't have to share the space with anyone. A lot of investors pulling out as well because the rental market went a different way than what we've been seeing. So you can see here the big dip down. It stayed there for a couple of months. People caught on. Great time to buy a condo. Shot the price right back up in January, and as things started to open up and be a little more comfortable with COVID and everything else. So you'll see, down, up, down, and then it's continued to increase, and now we're above that price point there in end of 2019 and early 2020. So on average, you can see the scale from 2016 all the way to 2021, and just this big jump similar to what we're seeing here. So I anticipate things will start to trend downward, if not just stabilize and flatline for a little bit, and we got to just play it by ear. Now, when we look at, we'll first look at 2018, 2019, and onward. So 2018 and 2019 are what we consider normal years. It's a constant, fluctuation of listings to sales, and it goes down. So ramps up in the spring, cools down a little bit. In the fall, we see a little bit of a jump, and then with winter, obviously, people are hiding inside, and there's not much movement in the market. So 2018, I've got the numbers here. In terms of percentage of listings to sold properties. So January 2018, 30% sold. Same with January 2019, 30% of homes selling. Great. That's about average. That would be considered normal throughout Mississauga. June, so at the height in 2018 of listings, 32% sold. There at the bottom, August 2018, 33%. So still within a good range. January 2019, like I mentioned, 30% sold. June, just for comparison's sake, 36%. August, 38%. And when we go to the peak of 2019, that's 40% of homes sold. Now, compared to 2020, obviously things got thrown around a little bit, and we got a little wonky thanks to COVID. So it's kind of altered the listings to sales ratios, obviously, as we know. So January 2020, 42% selling. Really interesting. June, for comparison's sakes, we have 38% selling. August, we have 39. September, at the peak of listings, 40%. At the lowest point here in April, 23% of homes sold. So listings dropped, however, so did buyer demand, so not many sales. And December, interestingly enough, in the winter, 50% of homes sold in 2020. And that brings us here to 2021. In January, again, seeing this trend around the 50%, 49% of homes sold. February jumped up to 58% of homes selling. So from an average around 30, which is normal, give or take, we're now seeing, 40, 50, 60% of homes selling, which is not normal. And that all goes back down to low inventory, high buyer demand, which is causing prices to drive up. Obviously, buyers are desperate because they're eating up 50 to 60% of the inventory, which is up, like I said, from around the 30% more or less average. So that is why prices continue to increase during the pandemic. Interestingly enough, like I mentioned, average price I'm sure will taper off. And with that, though, sellers' expectations are going to be to start increasing their price because guess what? They're seeing all these high prices. So when a property sells, the neighbor puts theirs on the market, and that one that just sold now becomes the baseline. The market could absolutely change in that timeline. So now we may start to see more inventory sitting longer. It might start to turn towards a more balanced market as buyer demands get fed up with these high prices and they no longer see the value in what has been happening. Now, this may or may not happen. We have no idea. We won't know until we're in it, or essentially until it's already happened. So something to keep your mind on. Timing the market is near impossible. Anyone who says they timed the market and they got really lucky, they timed the market because they knew what they were doing, they got lucky. They didn't know what they were doing. They just got lucky in that situation. So here's what we are experiencing. And the old saying goes, time in the market is better than timing the market. Timing the market's impossible. But we know throughout history, the longer you remain a property owner, the more equity you're building over the years and the more purchasing power you have in the future, whether you want to sell, cash in, retire, or use that equity to further your investment portfolio, help your kids or grandkids also get into property ownership. That is a fact. So there you have it. Any questions, leave a comment below. I know I went on a bit of a rant there, so if I'm talking too fast, let me know. I'll slow down, and like I said, reach out with any questions and I'll be happy to answer. Okay, thanks so much for watching, and until next time, take care.